Hey guys, today I want to talk to you about the importance of advice and in particular around term investments. Some of you may be reaching for the off switch already because you can't contain yourself about the excitement of talking about term deposits. But for those of you that are interested, I just want to talk to you a little bit about why it's important to understand what you're investing in and the importance of getting some advice around term deposits as well. So term deposits are pretty safe. They're one of the safest investments that you can look at, and they often make up a portion of someone's investment portfolio. Sometimes if you're a overly risk adverse type of person, then your whole portfolio might be made up of term deposits, which is something we need to talk about if that's the case. So you would have recalled me mentioning on previous videos that finance is all about risk and return. And when I say that, I mean it's about understanding your risk and return. There is no right or wrong investment, just so long as you are aware of what you're investing in and the risks involved in doing that. Because if you are aware of those risks and you're comfortable with them, then that's fine. But if you're not aware of those risks, then you could be up for some surprises down the line. And ultimately, the greater risk you take, the greater return that you might receive over the long term. But you should experience quite significant volatility and a higher probability of loss the greater risk you take. So with term investments, as I said, they're one of the safest investments you can look at. The banks are all heavily regulated and they have to abide by a lot of rules. So what should you look out for in a term investment? Well, there's three things that you should look out for. One is the financial strength of the organization that you're looking at. And that's easily found when you can Google an organization or bank's credit rating. That's usually a good indicator of their financial strength. And in New Zealand, we have some pretty strong banks. Their credit ratings vary from AA- down to BBB-. And I guess the question for you might be, well, what does that mean for me? Well, a AA- credit rating means that there's a 0.52% probability of the bank defaulting in a 5-year period. And a BBB- rating is a 3.44% probability of a bank defaulting in a 5-year period. So those probabilities are very, very, very low. But that doesn't mean that a bank doesn't default. It's happened here in New Zealand before, and it could happen again. You just don't know. So that's the first thing you should look out for when you're looking to invest in term deposits. The other thing you should look at is the term you're investing for, because when you're giving your money to a bank or a financial organization, you're effectively lending them your money. And so you want to be adequately compensated for A, their credit rating, B, the amount of time that you're investing it for, and C, the type of investment that you're looking to go into. And I'll get to that soon. But let's just go back to term. So term can vary from 1 month to 5 years sort of thing. So when you're looking at your term, say you are looking at 6 months and the interest rate for 6 months, I'm just looking at the interest rates now for 6 months. The interest rates seem to be around about the 3% mark. Well, if you're being offered 3% for 6 months by one bank with let's say a AA- credit rating, and then there's a term deposit offered from another bank at 3% for say 3 months, and again it's a AA- credit rating, then you're better to go with the bank that's offering the 3% for 3 months, because you're not being compensated for the risk you're taking by investing for that 6-month period at 3%. The risk for you is the longer the bank has your money, the greater the chance or the greater the probability of something happening to your money. So you want to take the shortest term for the highest reward that's most closely aligned to your goals and aspirations. So hopefully that makes sense. So the third thing is, and this is this is about the type of investment. So all the banks have what they call deposits or term deposits. There's also out there share term deposits. So a term deposit is an unsecured debt that you have to the bank has to you, and generally you will get paid out if something was to happen to the bank before the shareholders get their piece of the action. So where a share term deposit is offered, you are actually becoming a shareholder, and any unsecured debts that the bank has to depositors, they would get paid out before you would. And so you would get the leftovers from whatever was left after a bank went into liquidation. So again, that's a much higher risk to you than just a normal term deposit. So if you're going into a share term deposit, you want to make sure that you're being adequately compensated for the additional risk you are taking. So if you've got a bank that is offering you a term deposit at, say, 3% for 6 months, and then you've got another bank that's offering you a share term deposit at 3% for 6 months, then you would be going with the bank that offers you just the term deposit at 3% for 6 months. So hopefully that all makes sense, and hopefully you find that helpful, and hopefully you're seeing the value of getting advice when you're looking at term deposits, because as I've mentioned, term deposits are safe, but you want to make sure that you're optimizing your investment strategy for the risk return that you are taking. And look, if you want to get some advice around that, feel free to give me a call. That's what I love to do, is give advice to people to make sure that they are getting adequate compensation for the risk they are taking, and they are fulfilling their requirements, I guess, to meet their investment strategy, which is going to meet their goals. Have a good one, people.